Hi everyone, my name is Varun and I have a decade years of experience working with different types of corporations, starting from startups to MNCs and conglomerates. And over these 10 years, I have built thousands of financial models for different purposes. So today I'm going to tell you the secret of how to forecast and project the three financial statements and how you can make your model better than your colleagues.
Technicals of financial modeling, a very fresh module and the core blood of this course. We are going to talk everything about financial modeling in this module. You will learn from very basic hacks to complicated modeling steps in this module. And we are going to make it very interactive. If you ask silly questions, you learn more. If you ask few questions, you learn more. If you ask more questions, you learn even more. So ask anything and everything that comes as a doubt. No one knows you, so no one will judge you. Ask it so that everyone can learn. Let's get started. Let's start with the basic thing. What exactly is a financial model? Post it in the chat box. Feel free to unmute yourself and speak, but tell me, what do you understand by a financial model? Let the knowledge flow in. What is a financial model? Okay, so Ganesh says a numerical representation of some or all aspects of a company's operations. Okay, so the keyword here is numerical representation plus company's operations. Then our friend Jamin says a tool, calculator that considers different variables as input and helps in decision making. Okay. Then Mrinal says tool used for forecasting financial performance. That makes sense. Then we have Divya saying is representation in numbers. Yes, numerical representation. That's true. Then we have Buchubali saying detailed representation of financial statements. Okay. Financial numerical. That with that we can make educated guess about the future company finance and assumptions. Yes, that is right. Decision making and oriented towards the future. A future projection of a company, Savitri says. That makes sense. Rajan says it is used for decision making. Yes, it is used. That's a characteristic. Then we have Nandini saying representation of a financial situation. Again, that's right. Numerical representation or a financial representation. Then we have Bhumika saying forecasting future performance based on historical data. Bhumika, this is an incorrect statement. Forecasting future performance, 100% okay. Based on okay. Historical data, no. It is not only based on historical data. Historical data can 100% be used, but it is not only the source. So there can be multiple avenues of analysis. Historical data is one of those. So you should be like based on different parameters, including historical data. That makes sense, Bhumika? Okay, perfect. Then Mohammed says process of creating a summary of a company expenses and earnings in a form of spreadsheet. Mohammed, no, this is not the right answer because a bookkeeper and accountant is also doing the same thing. There should be a point in your statement that relates to future, projection, forecasting, dynamic ability, these things. What you have written is very basic and can be the definition of a accountant's job as well, who deals with the historical financial statements. Getting my point, Mohammed? Perfect. See how we not only got the right answers, we also got the problems in the statements that Bhumika and Mohammed mentioned. So that's the good thing about being vocal in that class. Anyways, everything that you said is correct except the two statements. Now, how to combine all of that into a definition? If someone asks you in an interview, hey person, what's the financial model? Why do you want to prepare a financial model? Like, what is the good thing about financial modeling? Why not anything else on this planet? Financial model is a tool, is a calculator that can be used for various purposes. It is a dynamic algorithm that a financial modeler or an analyst would devise, which would have the ability to digest different types of inputs, variables, process them as per the required intention, and give a desired output. The output could be a valuation figure. What is the worth of the company? The output could be an IRR. What is the return that the investment could make? What is the profitability of the company? There can be different reasons of preparing a financial model. Everyone might have a different objective. Of assumptions, process them, and give you a desired output. And I say desired, I don't mean that you want a profitability of X%, you get that. The desired means that you want profitability and it is you are able to see it through the model. And there are a lot of use cases. For example, if I tell you there could be a banking person preparing a financial model to assess the credit worthiness of the company, whether I should give loan or not. There could be a startup founder preparing a financial model to raise funding. There could be a corporate preparing a financial model for budgeting purposes. There could be an investor preparing a financial model to analyze what would be the returns if I invest in the business. There could be a shopkeeper preparing a financial model to understand whether I should go with the plan A or plan B. There can be hundreds of good reasons to it. And there is no definite stop point that, okay, this is the only concept of financial analysis. This is the only use case. Every day, there is a lot of engineering that is happening in the finance industry, and a lot of different questions come in the minds of entrepreneurs, in the minds of management, in the minds of investors, and to solve that through financial modeling. Yesterday, okay, so every class I take, I have a recent incident that happened. So I'll tell you what happened yesterday. So we are as a uh, like I was working with one company that is into medical industry. So they have plans to launch their product in 2027. Okay. Now they are preparing a financial model to understand how should they plan their capital expenditure. This was the question statement. So we went through the market research. We understand that what is the total market size, what is the share that they're targeting, and etc. etc. Then going specific about that particular drug that they are going to do the R&D on, what is the success rate, and all these parameters. We were able to devise a complete full-fledged financial model based on which they could decide whether they should do a capital expenditure of X dollars in June 24 slash July 24 slash postpone it by 50% to next year, some retain something. So these were the questions they were able to answer by understanding what is going to be the impact on the valuation if I spend now, because every cash flow impacts the valuation. Secondly, they were able to understand if I launch the product after 3 years, then when will I become profitable? What is going to be my break even point? So these were the unique questions that they wanted to ask about their strategy that they want to build. Nothing related to valuations in specific, nothing related to investor. It was more of strategic decision making that they were looking for. So that is the financial model. I'll take a pause. Any questions?
Sir, this is Ganesh Ram. Is there any cost cutting will be in the included in the financial modeling?
Cost cutting, as in you want to understand that what will be the impact of reducing the pricing of any particular vendor or anything like that?
Yeah, even though if you are doing some market researches, so like you have said an example of medical companies are doing launching at 2027. So is there cost cutting also included in that for doing the research?
Yes. So I'll tell you. Let me give you one thing. So I'll stop my screen sharing and I will download that model that we shared yesterday with the client and I'll show you. You want to see the real impact of what we did. Give me 1 second.
Yes.
And you will see that how powerful financial modeling is, what all you can do with the financial model. Give me 1 second. And interestingly, I've not even started the curriculum of this module yet. We are talking about building the foundation right now.
Foundation itself should be strong now, sir.
Definitely. Strong like you.
பாவம் பாறைக்கால் போக வேண்டிய பையன் இங்க வரைக்கும்
Gayatri, can you unmute? Can you mute yourself?
நான் பஸ்ல வரேன்னு சொல்லி கூட கேட்காம என்ன வந்து கொண்டு போய்
I'm just removing the confidential part of the model. Okay, I'm gonna share my screen again. Pay full attention and utilize this opportunity to ask anything. You can see my screen, guys.
Yes, sir.
Perfect. So this is a company into medical biotech. Okay. And this is the model that we created yesterday. So I'll walk you through everything, but I want to show this. So this was the analysis that was the requirement that, hey, you are going to turn in the sense of cash burn. Forget about what is cash burn, I'll tell you. But in terms of the cash burn, July 31 is going to be your month when you actually make money. You actually make money and you offset all the expenses that you made. Cash burn is basically that if I'm earning 100 and I'm spending 120, 120 is my gross burn and my net burn is 20. That is the cash I'm burning every day in my business. So on a cumulative basis, this is going to be the month. So all this analysis was done for that. This is a dashboard that they could analyze and look into their functioning and see how fancy the assumptions are. This is the financial model. Their entire focus was on revenue, taking the market, going to the sources, sourcing the number from there, then funneling down. We'll talk about this market approach as well. This is the financial model for a real company. And then they did evaluation. You have to be very logical while building a model. Everything has to be backed by a logic. Everything has a comment. That why am I taking this number? Why not something else? And then full dynamic ability through an index and cover page. This is the financial summary. You already know how to prepare a financial summary. This is a variance analysis. So they can just change this and see different months. For example, they add August. They're not going to make revenue in that. They are going to make revenue after 29, I think. So let's go to some future period, December 31, probably. They start making revenue. Once they add the actual numbers of that period, they will be able to see the variance, actual versus budget variance. Everything. All and good thing about a financial model is it should have checks. So here we create a check sheet always. All the checks. They are coming from respective sheets. That is how a real financial model will look and will solve for a purpose. There could be any purpose that it solves. Many purposes, I would say, not any, many. Okay. Now coming back to the class.
Okay.
So answer to your question is yes, there has to be a dedicated place in the control center of the model wherein you add the inputs for cost. You can play around deciding if you want to increase something, decrease something.
Yeah. Okay, sir. Thank you.
And one more model that I was working yesterday was an e-commerce model. So the company sells products on Amazon, and they are saying that as they grow their business, they will be able to charge, like Amazon will be able to charge them less money because of efficiencies of scale. So they will, on a per unit level, they will become more and more profitable. So that analysis they wanted to do. They knew that what is going to be the range of the charges Amazon charge for fulfillment, for referral, for storage, and blah, blah, blah. They wanted to create a model and create a path to profitability. So this was their question, that I want to create a path to profitability. This is the like unique and fancy words, but this is how they wanted to do it. And this is exactly what you are asking, that can I improve the cost? This was what they wanted. Okay, let's move ahead. Any questions till now, guys?
No, sir.
Can I have an energy, a question, or a thumbs up in the chat box? Everyone. Okay, Rajan. Everyone show some energy in the chat box. Okay, Amra. Amra, you were too silent today. All well? Okay, Bhumika. Okay, Nandini, Dipti, Kamaljeet, Bhavin, Sulekha. Jamin is always in full energy. Ganesh, Divya, Mohammed, Sudarshan, Naveen. Lovely. Okay, Kabir. Okay, Sawan. Awesome. Oh, that's sad to hear, but I'm sure you will take good care of him. Okay, lovely. See on the screen and read this out. Ask if you have a question. This is what you want to put it into a structure of what is a financial model. And why I would have appreciated if someone would have asked why it is a calculator, why not any other tool or any other word for it? Everyone has used a calculator in your life, whether it is on a mobile application, whether it is as a hard device. What is the work of a calculator? You input some numbers, you give it a command, it gives you an output. That is what a financial model will do. Someone created a calculator, you will create a financial model. You will create a financial model wherein it has dedicated cells for accepting the inputs. It will have dedicated locations for processing those inputs using formulas. Then there will be dedicated place to show you an output in terms of the financial statement, in terms of the charts, in terms of the dashboard, in terms of the analysis. And that will be your financial model. Okay? Read this out and tell me if you have a question. Numbers. Kamaljeet, answer to your question is numbers. See, whenever you are doing a analysis of a company, you look at two things. What is their financial performance? What is the profitability they are doing? And sometimes on the operational metrics. For example, let's take any industry. Let's take maybe Paytm. So you will look at what is the profit they are making, what is the expenses that they are occurring. That is financial revenues. Now you will talk about what are the number of transactions, what are the number of accounts that they have opened. They are not financial numbers, they are operating metrics. So that is the difference between operational and financial revenues, Kamaljeet. Okay. Jamin, you have a brilliant question. I would request you not to direct only to me. Type it again and send it to everyone in the chat box, and everyone look at what Jamin is asking. Again, it is sent only to me, Jamin. Everyone reads this question. Anyone has a reaction to the question? Like, what do you think could be the probable answer? Everyone experienced this, right? What could be the right answer to Jamin's question, guys? Tell me. Revaluation. Not explanatory, Naveen, something detailed. Others take it as a GD, group discussion. Jamin, put forward a point. What is your reflex now?
Actually, the thing I was looking for, sir, I would go for revaluation as Naveen said. But as I mentioned in the question, the day before the bloodbath, the market was on the all-time high, meaning that the stock would most probably be on the like all-time high of itself. And after bloodbath, there would be some correction in the price, which would lead to like in the favor of my assumptions. Maybe the valuation gave me a little bit high price, but after correction the valuation would go a little more down, which I was ready to pay the price as per my valuation. But
I
now
get
the
your,
correction, I would
I,
go like again for it.
I get your point. See, Jamin, first of all, you need to understand that the approach, whichever you take for valuation, DCF, market approach, NAV approach, anything, you are going to calculate the fair value. You are not going to calculate the market value. The valuation that you will do based on DCF, it will be the intrinsic value based on the growth potential, the fundamentals. Okay. It is going to be what the company will achieve in the future. It has nothing to do with the today's market sentiments. But there were some political news coming into the market, and people were reacting that if government A comes, the growth would be better. If the government B comes, the growth would not be better. So this was the market sentiment. And that is something that they levied on entire economy. So in general, the market was going up and down. Now that has nothing to do with the micro business level, but overall it has to do with the market. So in general, if the stock has a very close beta, it has a very close reaction to the market, then the sentiments were different. But if you're doing a DC evaluation, your company projections are not going to change. It is going to be the expected market return that is going to go up. And if you're depending on your beta, your WACC will change. And accordingly, the valuation will change. But the point I'm making here is that what you do as a valuation methodology, it is a bit more static. It's not volatile. Like every 10 minutes, it changes. It is the market value that changes based on the real time market sentiments. The valuation that an analyst would do, it is comparatively static because it is based on broader facts and not small momentary market sentiments. Getting my point, Jamin?
So I got your point, but the thing is like we are considering the data which is of like of the company, right? and the market or the place we are playing with the model is like based on sentiments. How can we like judge it, sir?
See, there are two things in DCF. One thing is the numerator, one thing is the denominator. The numerator talks about the company cash flows. For doing the company cash flows, you have to go a bit very specific to the company. That what is their business model, what is going to be their peers, and all that stuff that we'll cover in next 30 minutes. That again are very company specific, but some of the variables are definitely sourced from the market. Now coming to the denominator, that is the risk adjusted discount rate. It is very, very, very well capturing the sentiments of the economy in terms of the risk, in terms of the company size, in terms of the equity class, and in terms of the country. So that is the place where they get captured and your valuation comes.
Clear, got it, sir.
Perfect. And since you asked this, I remember there was a Singapore client who I was working with approximately 1.5 years ago, and he was like, "Hey, this is the company that I want to invest, but I feel awkward." This is a statement he made. I feel awkward if I change the projection numbers of this company because I that will be disrespect to the management. But I want to bring down the valuation. What should I do? I said, if you think that the investment is a bit risky, you should capture that risk assessment in your WACC, and there is a specific place to do that. Company specific risk premium, the alpha. That's where valuation analyst plays.
Got it, sir.
Okay, now if I show you, this is the model we were talking about, right? You see this company specific risk premium. This is the place an analyst could play. Since this is a business in medical, they have a high risk of default. When I say high risk of default, I mean, what if they are unable to devise or produce a product that is going to be successful? You will have no guarantee. Medical profession, when they are inventing a new drug, it is a risky bet. What if there is a side effect? What if they don't get the government approvals or the authority approval? So this is the place that 10% is the risk that we have added. Other things are sourced from specific sources, but this is the playground for making a alpha. This is where you will can adjust. Okay.
Clear, sir.
Awesome. Everyone done with this page? Awesome. Awesome. Hope it is not going very fast. You are able to understand everything, guys. Lovely. Now tell me one thing. What all is included in a financial model? I should have asked this question without showing the medical one, but still, what all you think should be included in a financial model? Tell me, what is the answer? Sensitivity analysis. Rajan says sensitivity analysis. Jamin, are you stalking me by looking at my previous sessions?
No, sir. This is my first session only, sir.
It should be presented as a book. Did I say this ever in your batch?
I just saw it, sir. You just gave as a reference.
I Well, means that you checked out some other session of mine, right?
No, 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 no. I'm talking about current session only, sir.
I'm talking about what?
Current session only. Like you make us saw the valuation you did of a
Hmm.
medical company. So I was like referring with the book. Like it had content, it had cover page and all those things.
You are smart, I must say that. But that's how I would have put it. It is a book. Good. Divya says balance sheet. Okay. So, Divya, let's say all the three financial statements. Then we have Butcher Bully saying ratio analysis, P&L, cash flow, assumptions, KPI. Okay. So, financial statements and assumption tab and a summary tab with KPI and ratio analysis. Okay. Divya says CFS. Okay. Ganesh says details about assumptions. Okay. Here we have the assumptions. Then we have Kamaljit saying income statement, balance sheet, cash flow. Okay, the three financial statement. Panjala saying historical statement. Yes, that is right. See, what is the financial model? It is a calculator. It has to take certain inputs that will be processed and will give you an output. A typical manufacturing plant has this, similar to a computer has this, similar to your financial model will have this. You give them inputs, they will process it, you will get the output. This is the financial model. Now you have to beautify this. This is your assumption tab. Also known by inputs, also known by drivers. If someone asks you, what are the drivers of a financial model? That means they are asking, what are the variables? What are the assumptions? What is the factor that is going to influence the profitability, the revenue, the sales, the cost, the blah, 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 blah of your financial model? Then the processing. It is the calculations or working. You remember, if you are from a commerce background and accountancy in your 11th, 12th standard, your teachers must have told you that prepare working notes, do the mathematics below. That is what these are. Then output could be the financial statements. It could be the charts, a dynamic dashboard, financial analysis, valuation analysis, return analysis. All these are outputs. Now you have to package this into a few more things. One thing is cover page. One thing is index. One thing is company overview. One thing is checks. One thing is preface. One thing is model guide. Okay. Cover. See, everyone has read a book. Do you start the first page with the content itself? No, there is a beautification done around the book. There is a imprint that what is the book title? What is the edition of the book? What is the purpose of the book? Is it a story book? Is it a science academic book? It is a mathematics book of 10th standard. What it is? So everything is mentioned on the cover page. Then you get to the next step. You have the table of content. A book could be a 20 pager. It could be 500 pages. You should know which page you have to land to for a specific topic. That is going to be supported by the index. Similar to that, your financial model could be a single sheet financial model, and it could be 50 or 100 tabs of financial model as well. People should know where to land. You need to understand one thing, guys. The financial model that you will be build, the same file will be looked up by different users for different purposes. For example, you build a financial model for a company. You give the model to that company. Now, the CEO of that company would be interested in looking at the profitability charts. The marketing team would be interested in the expenditure of the marketing only. The operations team might be interested in adding the cost and the revenue assumptions. The strategic team might be interested only on the future growth aspects. The capital raising team would be interested in understanding when is the company needing funding and what amount of funding. The credit team might be interested in understanding the credibility of the company's performance, how well they are going to perform to raise debt or to pay off their interest. So the same model will have different use case for different people on the floor. And they should know which tab they should look for. And that is where preface comes. This explains what are the different sections in a model and what are the different parts that are covered there. Okay, so these are the few things that are covered. We will start with the cover page now. Everyone has seen a cover page of a book, right? Tell me one thing. If you have to prepare a cover page of a financial model, what all would you like to include in that? Tell me.
Title,
Title,
A company name, company background, and
company name, description, and company logo. Yes. Company details. Okay. Detail, description. Valuation type. Valuation date. Amra, that is specific to valuation model. So I'll put it below valuation date and everything because in general, a financial model can be built without valuation as well. Business of company. Yes. Description is here. Jamin says legend. He's again cheating, guys. He already has seen this class, I think. Don't treat him very smart.
No, sir. No, sir. No, sir.
Mummy kasam.
Yes.
Okay.
so what
I'll
is the
question you.
third point?
Legend. Legend. We'll talk about that. Then purpose. Agenda. Why? The answer to the question, why this model? That is fine, Jamin. Why to be in a hurry when you can be relaxing and learning? You have the entire life to learn. Take it easy.
सर लाइफ एक ही है ना प्रॉब्लम हुआ है सर
Everyone has a single life only, na? But it's how you live it. Which city you are based out of?
सूरत गुजरात
Then there is a little life there. Nothing after 7 p.m. Okay, lovely. How many of you are from Delhi, guys? Just type it in the chat box. Where, if in Delhi, where? Where exactly? Sarita Vihar. Okay. Others, anyone else from Delhi? Noida. Which sector, Shresha?
It's 107.
Oh my God. 3 digit.
Yeah.
How far from, like, so it would be something when we go to Vrindavan in that route, right?
Yeah, it's on the expressway, so you have to move a little inside at the
I get that.
Access House, if you would have seen Access. So opposite to Paytm office, towards Paytm office.
I've only seen IIM space. I see profitable businesses. Okay. Anyways. Okay. Anyone else? NCR? Very less people from NCR in this batch. I always have like 15-20%. Hmm. Okay. Why I was asking this is because I'm based out of Delhi. So if there would have been multiple people, I would have invited you for a lunch in the office. Anyways, anyone who is free, who is coming or who is in Delhi, feel free to visit the office and talk about anything. Okay, now coming to the
I
cover
would
page.
want to meet you and so regarding my professional career and all. So I wanted to discuss that.
Anytime, any weekday, you can come to office. Any weekday.
Sure. Thank you.
9:30 to 6:30.
Yes.
Perfect. I'm sure you will fly and come, Jamin.
I would love to sir
Perfect. You get a good placement, I'll sponsor your trip to Delhi. Promise.
Done.
Perfect. Sulekha, feel free to anytime. Any weekday, 9:30 to 6:30. You have the addresses, it's in Pitampura. Awesome. Now coming to the topic again, cover page. So this is the things that we talked about. Now let's go a bit detailed in this. So definitely we need to tell about which company, which business are we preparing the financial model for. But there is a catch here. The generic answer that all of you would agree with is mention the company name, add the company logo, add the description, tell about if it is a public company, tell about the ticker, tell about the stock exchange it is trading, 52-week high, 52-week low, all of this stuff. But if you are an investment banker, if you are a private equity analyst, you are working in any type of investment firm which deals in confidential data, you are not going to disclose the company name without signing an NDA. NDA stands for a non-disclosure agreement. If I am interested in investing a company that you are advising as an investment banker, you are not gonna tell me the name of the company till the time I sign an agreement that, hey, I'm not gonna disclose it outside. I will keep it confidential. Till that time, you will code it as project, maybe project food, project alpha, project green, project anything. That is going to be a very common encryption you will do as a part of your rules. So that place, the company name will not come, company logo will not come, company description will come, but you are going to put the description in such a manner that you cannot identify what is the company. So you cannot write like this, you cannot write like this, founded in 2015, company alpha operates in food delivery industry and is managed by Mr. A. Then everyone knows which is the company because everyone knows who is Mr. A if I add the name, actual name. So you have to be smart enough while describing the business for a confidential project in such a way that you do not put anything that is very, very specific and compliance related confidential to that particular company. You can mention generic thing. It is in this industry. It is based out of the northern part of India, operating in 10 cities of India. That is okay. But not the name, not the logo, not the name of the CEO, because that will make anyone identify what is the company. So that is the first point. You don't always mention the company details. So you will work on two models. Okay, one is Colgate, that is a public company. You will everywhere mention, hey, I'm doing Colgate. Then there is a private company that you are going to work that is into car segment, the taxi services, ride hailing services. That time you will call it as Project Alpha. So just to give you a flavor of how to do it without the branding and how to do it with the branding. We have two assignments in that case. Alpha is going to be your LBO model. Colgate is going to be your pre-statement and valuation model. So that is the first thing about the company description. Now you need to second thing mention the agenda, the purpose of the model. Why are you preparing the model? This could be mentioned as little as a name. Hey, financial model. Hey, valuation model. Hey, path to profitability model. Hey, returns model. Or it could be written in a paragraph that this model is being prepared to analyze the investment opportunities and provide a return if the investment is raised from X, Y, and Z over a period of A, B, and C. So it could be a paragraph that you are mentioning, or it could be a simple name that you are giving to the model. For example, Project Alpha DCF valuation model. Then everyone understands this is the agenda is to do the valuation through DCF. So you can do it either way. That is the second thing. Now the third thing is you need to mention the contact details. Now understand it from three different perspectives. One is investment banking. You prepared the financial model, you titled it Project Alpha, you sent it to the people, the potential investors in the market. Now they don't know which company it is, so they cannot reach out directly to the company. And as a advisor, you don't even want to. So if that is a bit tricky to understand, let's take a very real life example. So you have seen property dealers in your locality. If you go out and say, "Hey, I want to uh, go for a house, I want to rent. Like, I want to live in a rented accommodation. I'm looking for some properties. Can you tell me some good properties in the area?" They will never tell you that go to that person and rent it. They will say, "Hey, I know for a property that is in that area. Are you interested in second floor? It is a park facing. I'll take you there." And because they will never leak out. Otherwise, you will directly go and they will not be able to earn the commission. That is the similar cases in investment banking. The investment banker never wants the potential investor to know the company, because that will create a buzz in the market and people might directly reach out to that company and say, "Hey, I'll give you the investment. Let's stop taking services from the investment banker." But this is not that basic, because investment banker is there to add value to the engagement. He or she would be very smart in creating a story, taking all the burden of the work and doing the complex and fancy things. So investment banker is going to put the deal in the market, and the details should be mentioned of the advisory team so that the potential investors can reach out to them. So that is the first point. Second point is corporate. So let's say you are working in any corporate house and you are building the financial model for them. You are sitting in the finance department, you are a smart FP&A analyst, and you are building the financial model. But is the financial model yours? No. It is, you are the creator of the financial model, but financial model is the property of the company, and it would be used by everyone in different departments. The marketing team would be creating marketing budgets and adding to it. The strategy team would be looking at the analysis. The operations team might be adding some inputs. In that case, if they have a doubt, whom should they reach out to? There should be a single point of contact that is called spoke, single point of contact. So that ways you need to mention the concerned analyst details so that the different department people, when they are using it and they have any queries, they can reach out to this person. Now, third thing is probably equity research or market publishing. So let's say you prepared a financial model. You see, there are equity research reports that are published, broker reports, analyst reports. They provide recommendations that, hey, it's a buy, it's a hold, it's a sell, or whatever. And then they add their details. So they do it for public. They could be paid, it could not be paid, but they do it for the public use in the retail market. And once you publish your model or publish your findings, you want people to come to you and become your clients. So that time it's more of a marketing stunt that they can reach out to and say, "Hey, this is the recommendation. Okay, I want to talk more. Reach out to this person." Then your contact details are important. And what I'm telling you, it is not only on the cover page. Okay, listen it this way, that your financial model is not only the Excel file. I'll repeat the statement. Your financial model is not only the Excel file. Sometimes no one is going to touch that Excel file. You are going to convert that into PDF. You are going to convert that into a presentation and send it out with a beautiful print setup that we will learn in 2 classes later. You do a very, very sorted print setup and convert your Excel model into a PDF, and that is going to be used. So it will actually become a book. And then they cannot see the mathematics, they cannot see the formulas, they only see the values. And if they have any question, they will reach out to this person. So that is the agenda of having the contact details on the model. 3 different purposes, 1 solution. Okay. Now the next point will be status. You need to understand this, guys. A financial model can be built in 2 hours, 3 hours, or it can take 2 to 3 months. Okay. Now what does that mean? I told you I'm working on a company which is e-commerce. I took 7 hours to build their financial models. I was also working with a company based out of Dubai that was into luxury watches. It took 3 months to finalize their financial model. The reason is not that I was working 90 days, 8 hours to own that model. No. But the point is that sometimes there is a lot of communication that happens. You request for certain items from the management. They will ask their accountant to build it. They will deliver it. Then you have another round of diligence call with them. You are waiting for the latest publication. So these are the lags that can happen. So a model can be done within a day. It can be take up to a quarter. So during this time, the model is not final. If it is taking a quarter, it is not final. You are doing it. Different people might be working on it. Different people might be reviewing it. So it is good to mention the status. If it is a WIP version, it is a draft for discussion. It is a final. It is final but pending edits. Is it final but pending review? So these type of things can be mentioned on the cover page itself as a status. I always add a drop down for these things, and probably sometimes I also add the date, latest as of this. So anything that is after this date is not captured here. So last updated on, I mentioned the date as well. Last updated on and last updated by, so that I know who worked on this model last. So this is about the status. Then there is a related thing to it, version. Since you are going to work on this model for a long period, you will be creating a lot of versions. Trust me, all of the people here, I can bet 90% of you will make an error when you make the Colgate model. You will not name your file correctly. There is a good format or good way to name a file. For example, it is alpha. So I'll call it as alpha financial model underscore date. So let's say it is 8th June 24 underscore. Let's say it is Jamin's version. So VJD, Jamin's initial 1. Next day, let's say Shresha comes into the picture and picks the model. Alpha financial model 9th June 24 underscore V SS2. The same day, someone else comes into the picture. Let's say it is Amra. So 9th June 2024 version Amra Mahmood 3. So this way I can see that this is the third version. This is latest status of this date, and this is the person who has last edited it. So very, very important to create right names in the file for version control. Otherwise, you will get lost. You won't be able to realize which one is the latest, who worked on it, and everything. So this is very important, and this can be done within the cover page or as a file title. I would recommend file title because that's neat. And once you sort the file name, it comes in order as well. Okay. Any questions?
So one small doubt.
Yes.
Like we discussed that we will get the data of the company. Like, is it not a threat to the company's information?
What is the threat?
Like we know all the things they are dealing with. Like we know the basics of the
So
company.
you have to define who are you then. Are you sitting in the office? Then you are the employee. You have to get the data. If you are an investment banker, you are providing them a service. You have to get the data. So it is more about what is the reason, and to safeguard that, they sign the legal contract of NDA. When you join an organization, or you are a working professional, or Jamin, what about you right now?
So I'm a professional, right?
So you must have signed a lot of documents when you were getting into
Yes,
that job.
yes,
So one
yes.
of them was NDA also. You have already agreed that you will not disclose the data that you get. And the bad thing and the good thing about our industry is that when you are into this field wherein you deal with the financial data, anyone from Big Four here? Okay, let's take a real example. Anyone here from Big Four? No one working for Big Four in this batch? Was it? Was in Big Four. Okay, Sudarshan, then you will be able to answer. You have to declare the investments also, right? Sudarshan, can you come on the mic? You have to declare the investments that you make. You have to take the
Yes, sir.
approval
Yes, sir.
before investing in any particular stock, right?
Yes, yes, yes. And
Okay,
for the clients we are working, we are not,
allowed to.
allowed to take shares uh,
Exactly.
of
You slash your blood relation, your
blood
family,
relations
anyone who is
or
dependent on
anyone
you.
friends or
Exactly.
anyone that I may know.
Correct. So that is how the corporates keep a track. So when you are joining any company, they will ask all your bank details, not to put the salary in all of them, just to track you don't make investments. They will ask all your demat account details. They don't want you to invest in a company by sourcing the confidential information through their company and indulge into the illegal activity of insider trading. So that is how it is. That answers your question. So
Yes,
as
yes, sir.
business houses, you sign NDA. As employee with the company, you sign NDA. Also, as a next check, if you have to invest in a particular company, you need to get the approvals, and there are certain bars that you can't create. For example, I'll tell you, PwC. They have. I'll not name everything, but PwC, what it does is they have a few companies that are auditors to them, auditors to PwC. So you cannot invest in the shares of them. They have a create guideline that you cannot invest in A, B, and C companies. So that's how it works. Compliance is a very important and difficult thing. Otherwise, the globe will go for a toss. You are living with that data, you will call your friend, hey, invest in this. That's not how it works. That's why authorities like SEBI and other things exist in the economy. Okay, now moving to the next point. Legend. Okay, probably not legend, probably it should be miscellaneous. So you are going to work for financial models across geographies. I told you something about US. I told you something about Singapore. I told you something about Dubai. So I work on models from different geographies. And guys, that is the beauty of financial modeling. It is not going to change with the borders being changing. It is not something that an Indian man will do differently, a US lady will do differently. Financial model is financial model. And that is the beauty and the power about this service and this skill, that you can onboard clients across the globe. For that, you need to clearly mention what is the currency that the model is in. Is it a INR? Is it a dollar? It is a yen or whatever. And units, is the units thousands, hundreds, lakhs, millions, billions, whatever. So this should be mentioned clearly. Then you need to mention legend. I remember someone asked this, what is a legend? So your financial model should not be a boring black and white sheet. There is a specific color scheme that you need to follow for the font. A blue color number means it is an input. It is a hard coded value. A black color number means it is a calculation. A red color, or let's say a green color number, means that it is an intersheet linking. Red color could be assumptions or negative, and pink color could be miscellaneous. But these three are the core colors that you need to follow. And you need to mention it on the legends, on the cover page, that which color means what. Because financial modeling people understand this very well. But someone who has no experience, who is a startup founder, who is very good at business, but nothing in finance or Excel, he won't understand that. What does this color mean? So you need to mention that on the cover page, that what is the significance of each color. And these are font colors and only for the numbers. You don't have to do it for the text, for the particulars. That is good to be black. Otherwise, the theme of the model, if you are disclosing the name of the company, keep it that. If you are preparing Colgate model, keep the red theme. If you're doing Swiggy, keep the orange theme. So whatever is the brand color of that particular company, use that in your model. But don't use more than 3 shades of the color. Don't make it a rainbow. No black and white, no rainbow. Something like 3 shades of color is okay. It should be clean. It should not look like a cosmetic makeup kit. It should be a professional model with white background, some here and there branding of that particular company. We will see a lot of models. You saw that medical, it had the blue gray color theme. Okay. Then the last and the most important thing, disclaimer. Now, this has multiple purposes. Some people put it for fun. Hey, I'm preparing this model for my educational purposes. Don't buy stocks because of this. They put it and post it on LinkedIn. Some companies, like I could be an independent valuation appraiser. In that case, I will type that this valuation is not committed or is not warranted by me. It is solely based on the information that the management provided. Because if tomorrow the value goes up and down, the projection goes up and down, the investor should not sue me. I don't own the numbers. It is the management who provided me the guidance and they own the numbers. So talk to them if they are unable to meet the target. Third, it could be that there is a lot of confidential data. Don't put it out. What is we blah 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 blah. There is no 100% commitment. The projections are solely based on analysis, and there is no guarantee of them getting achieved. So these type of languages, which are generally drafted by the legal department, go in the model. Sometimes as a small portion in the disclaimer, sometimes as a dedicated disclaimer page. So that is about the cover page. Read this, and once you are done, post a thumbs up in the chat box or a question. So question or a thumbs up. We are going to talk about Dipti in the next 1 hour. That will take 20 minutes of my energy to explain you that concept. Wait. And I request everyone to direct the messages to everyone in the meeting and not only me. Let others learn from your questions as well. Rajan, my friend, one page. It is a cover page, not cover pages. Cover page is the first page. All of this should be done in a single page. Okay, Kamaljeet. Others done? Question or done?
Sir, if two persons are doing same project with the different numbers, what will be the exact financial position will be taken by the company, sir?
What will be the exact? Sorry.
What will be the exact numbers will be taken, financial positions taken, now financial numbers taken by the company, sir? If two persons are doing the same project of the same company.
See, the historicals will be same for obvious reasons. You cannot have two different revenue numbers for the last year. So
Okay,
historicals, there is no reason to have different value for two people.
okay, okay,
Projections, it is how you model it. So there are different styles of modeling, different sources of assumptions, and there are multiple right ways of doing it. So it would depend who is doing how.
okay,
So if you are doing the value, doing the model for Swiggy and I'm also doing it, we both will take the same number for 2021, 2022. But you might use a different metric. I might use a different metric.
okay, okay.
Okay. See, if everyone does it the same way, no one will ever be able to make profit. Because if everyone becomes a rational analyst, then everyone will get the same value. who is going to, for making someone a profit, other one has to make a loss. So everyone cannot be the same. That's the rule of investing.
Okay. Okay.
Investing is a zero sum game. Okay. Okay, let's take a break here. We'll reconnect at 11:20 a.m. and have some water, digest what we have learned, ask any question, and let's talk in next 10 minutes then.
Yeah. Okay, sir.
Okay, let's resume. The next thing that we are going to talk about in the structure of a financial model is index. So index is going to the place where you will mention all the tab names that you have in the financial model, and it is also going to be the navigation place, navigation area. So there are two ways: either you type the text or you add a shape and type the text. You can add hyperlink in both the ways. What is the shortcut to add a hyperlink, guys? What is the Excel shortcut used to add a hyperlink? Correct. It is Control K. So you have to use Control K as a shortcut to add a hyperlink. Okay. Now, there are few things that you should keep in mind. One is the name on the index page should match with the name of the worksheet. So, for example, let's say you have two income statements. One is a monthly and one is an annual.
Sir,
That
you
is
have
how you have.
stopped sharing screen, sir. Sorry for the interruption.
You can't see the screen.
Yeah,
Yeah,
Oh, my bad. Sorry. You can
yeah,
see now?
yeah, sir.
visible.
Okay. Thank you. Okay. So I'm saying that if you have two income statement tabs, one is a monthly income statement, one is an annual income statement, that is how you have added it in your index. So similar should be the nomenclature for the tab title, like the name of the tab. So if you go here, so this sheet one, this is the tab title. It should be of the same format. It should not be like IS1, IS2. Although both are IS, but some people would get confused if monthly is one or annual is one. So you should not leave any room for confusion to the user. Okay. Now I'll show you a few example of how to prepare a cover page and index. So this is an example of cover page plus index. So here you have added legends. A stands for actuals, E stands for estimated, blue for hard coded, black for formula, green for intersheet. The content, the person who prepared it, company logo, description, and a few details. This is a second example of a cover page, a bit cleaner. Then read this. Okay. Then this is an example of a index. You have buttons. This is more of a text wherein you have sections and then exhibits. That's how it is titled. Then a very simple example. Then this is another detailed example of an index. You have sections. This is similar to the MS Excel classes. You saw that Excel book. This is similar to that. These are buttons. This just insert shape, make it in the color scheme of the model, add a hyperlink. Okay. I'll show you a few more examples of the cover page that students like you prepared.
Sir, you just give escape for sheet. One is in editable mode, so that is why it is not open.
Okay. So this is an example of a cover page that the student prepared, and it has every good thing that it should. So the title, the logo, company description, the legends, the company information in terms of the CIN number, code, and all that stuff. Then the person details, disclaimer, sources of data, and the version details. This is a tracker that he created that I worked on this, and this is the remarks. And this is the index that he created. This is a combination of index and preface, wherein he added the sheet name, he added what is this sheet meant for, and the link to reach that. Isn't this cool? Isn't this clean? If I do a print preview, this is how it looks. I can enhance the print setup, but for now, this is how it looks. Okay, one more example. Model, description, logo, summary, some graphs, then the details. So there is no limit of the creativity that you can use. She added a tab for business model. So you can add your research analysis in a financial model. It should be a good model. It should have something that will impress and that would add value to a person looking at it. I personally like the business summary on this page. It looks very clean, very sorted. So this person added a cover page, added an index. See this index. This looks like as if it's a very good book that he has written. You land to the divider. You go back, you click any of these, you land to that particular chart. This is ultimate model. How good this looks. Isn't this cool, guys? Now, business summary looks like as it's prepared on a Word document, very well formatted. Sector, price, key stock highlight, peer comparison, company overview with charts, product innovation. He did ultimate research. And Naveen, same name like yours. SWOT analysis, shareholding pattern, stock performance, key execution, auditor opinion, all the sources. Index is okayish. Cover page is okayish, but everything else is fantastic. This is a bit flat. Not bad, but a bit flat. And he added a password. No one can take his page. Okay. So there is no limit to the creativity that you guys can use. I'm telling you the concepts. Now it is on you how you want to make the best out of it. Okay.
Okay, sir.
Okay. The next thing that we are going to talk about are assumptions or inputs, financial statements, and output or summary. Let's start with this first. So, although the structure is cover page, then index, then it can be the summary or output and financial statement and then assumptions, or it can be assumptions, summary, and then financial statements. It depends on how people want to see it. But for now, we will start with the financial statements. So, someone asked it in the class today. I'll ask the same question. How to source the historical financial statement. Okay, Divya, it was you. I think it was Dipti also. Right. Yeah. Can I ask one English question? What is the difference between historic and historical, guys? This is a simple English question, nothing to do with finance. What is the difference between historic and historical? Anyone knows?
Something on importance, sir.
Which one? Historic or historical?
Historic is importance, and historical is the data which is of the past.
That is right. So historical basically means that anything that is of the past. Uh, Correct. Everything that you mentioned in the chat box is correct. So historical, anything of the past. And historic is something significant. Like 1947 was an historic year for India. Historical means anything that is in the past. So it is historical financial statements, not historic financial statements. Because some people I've seen call it as, hey, can you give me the historic financial statements? And then an Englishman would say, which one? What historic? You have to say historical, okay? Now, coming to this question, right, right, Sujit. Okay, coming to the question, how to source the historical financial statements? From where will you get the financial historical data?
MCA.
Sorry, what did you say?
MCA.
MCA. Okay, yeah, Ministry of Corporate Affairs. Okay, Sudarshan.
Yahoo Finance.
Yahoo Finance. Jamin says Yahoo Finance. Naveen says company website, investors relation. Then Bhumika and Panjala says screener. Okay. What else? Tell me more.
Annual reports of the company.
Annual report, yes, that's right. Annual performance statement of any firm. So it is very generic. Can you boil down to a title like annual report or press release or quarterly financial statements, audited reports, something like these? Anything more, anyone? Okay. Now, do you realize one thing, guys? This is biased. The answers are biased towards a public company. So hence it is only 50% of the answer. All of the points that you mentioned is applicable for a public company. You will get on the stock exchange for a public company. You will get the annual report, investor relation for a public company. You will get Yahoo Finance for public company, Screener public company, everything for a public company. So the answer is incomplete. So the point here is that whenever someone asks you this question, coming to your point, Jamin, when someone asks you this question, you need to bifurcate that. Hey, I can tell you where you will source the financial statements from, but it would depend if it is a public company or it is a private company. If it is a public company, there are multiple sources. One, the company itself. And when you say the company itself, go to their website, Within website investor relations section, within that annual report, quarterly financial statement, press releases, management presentation, investor presentations. The second way is go to the stock exchange. Go to the NSC website, BSC website. For US companies, go to SEC website, go to Edgar and source the financial data. Okay. The third thing is go to the databases. Databases could be like Yahoo Finance, Money Control, Screener. These are free. Paid databases could be like Bloomberg, Capital IQ, FactSet, uh, Refinitiv, PitchBook, all these. Then the fourth way could be broker reports. See what they are saying. So these are the four sources of sourcing the information of a public company. For private company, there is only a little probability that the data would be available in the market. So the source will be the management or the company itself only. They might give you their management accounts. They can give you the audited financial statements, or very interesting, they can give you the accounting software exports. Every company must have an accounting team. There must be an accountant, there must be a bookkeeper who would be maintaining the financial statements on Tally, on QuickBooks, NetSuite, Zero, somewhere. So they can give you the export. That export could be a PDF or Excel. It could be the financial statement or a trial balance. If you have the financial statements formatted, use it. If it is a trial balance, convert that into a financial statement and then use it. So that is the full-fledged answer of the question. How to source the financial statement. Divided into public, private, public these things, private these things. Now you have the full answer. Any question? Yes, it can. The answer is yes, Jamin. That is also a source. But that is a tedious source. You would prefer not involving a middle authority. Rather, you would like to do it directly, which requires less of approvals and cost. So that's not the recommended approach. Any question, guys? Is this clear? Is this knowledge flow getting into your brain? Now I have a question for you guys. Trust me, it is an easy question, but you will find it difficult. Prove me wrong that you find it easy, okay? There are three financial statements. Let me create a base. Income statement, balance sheet, cash flow statement. Whenever you are preparing a financial model, don't dare to place the sheets randomly. It should be in this order only. Income statement, balance sheet, and cash flow. I don't want to see ever in your life you placing balance sheet, then income statement, then CFS, then balance sheet, then income statement. No. Income statement, balance sheet, cash flow statement. Maintain this dignity of the order. Okay. Then income statement is also known by the name of P&L account, profit and loss, statement of operations, statement of profit and loss. This is known by the name of statement of financial condition, financial position. Cash flow statement, statement of cash flows. Now, cash flow statement further has three parts: cash flow from operations, cash flow from investing, cash flow from financing. Now, income statement is supposed to be structured like this: revenue, you subtract COGS, you get to the gross profit. You subtract SG&A, you get to EBITDA. You subtract D&A, you get to EBIT. You subtract interest, you get to EBT. You subtract taxes, you get to net profit. This is called direct cost and stands for cost of goods sold. This is gross profit. This is selling, general, and administrative expenses. This is EBITDA. This is depreciation and amortization. This is earning before interest and tax, interest, earning before tax, tax, net profit. SG&A and D&A. together are called operating expenses, and hence EBIT is called operating profit. Do not call EBITDA an operating profit. EBITDA is a non-cash operating profit, but EBIT is the operating profit. And EBITDA is a non-cash operating profit only if there are no other non-cash items. If there are any other, you need to adjust them. But EBIT is the operating profit. This is the flow of an income statement. For balance sheet, it is current assets, non-current assets, you have total assets. Then you have current liability, non-current liability, you have total liability, you add equity, you get liability plus equity. So your assets should be equal to liability plus equity. And this is called accounting equation. Can you tell me which accounting principle makes this happen? Because of which principle is accounting equation true? What is the accounting principle name?
Double entry system.
Correct. The answer is correct. Correct, Bhumika. Correct, Sulekha. Double entry system of bookkeeping. Okay. Correct, Sojit. It is the double entry system of bookkeeping which makes this accounting equation to be true. For all those who have forgotten the concept, it's basically saying that every debit should have an equal credit. The sum of all the debits should equate to the sum of all the credits of a financial transaction. Okay. Then comes the cash flow statement. The flow is cash flow from operations, cash flow from investing, cash flow from financing. You get the net cash. If it is a positive, it is generated. If it is negative, it is cash used. Then you add the opening cash balance, you get the closing cash balance. This is the flow of a financial cash flow statement. Okay. Now, the cash flow statement can be prepared on direct method. It can be prepared on an indirect method. In both the methods, CFI and CFF remain the same. It is only the cash flow from operations that changes. Now, if it is a cash flow from operation from direct method and indirect method, this is the preferred one. You will always use this. This is going to be used in a model that is 13-week cash flow model. For direct method, you are basically going to record the receipts and payments or disbursements. You will say, this is the money that came in, this is the money that went out, this is the final net cash. In indirect method, you will start with the net profit. You will add back the non-cash and non-operating because you are talking about cash flow from operations. So anything that is non-cash and that is non-operating is not required. So while reaching the net profit, you must have deducted the expenses. Now you have to nullify that. So you will add the non-cash and non-operating expenses. You will subtract the non-cash and non-operating gains. You will get to the operating profit before working capital changes. Then you will subtract changes in working capital and you will get to the cash flow from operation. This is the flow of CFO. Everyone understands this?
Yes, sir.
Any question? No question? Then I have two questions for you. Next 15 minutes, answer these two questions and that's it. First question is, if the business is expected to sell 20% more products on credit, or let me make it easy for you. Let me make it easy. Let's say account receivable increased or is expected to increase in 2024. What will be the impact on CFO? That is the question.
Negative.
Sudarshan says negative. One answer. What else? Everyone answer it. Irrespective you answer it right or wrong, but say it.
Sir, we want to subtract from cash flow from operating activities because it is a cash outflow.
Bachubuli, you are partially right, partially wrong. It will be subtracted, I agree, but it is not a cash outflow. Money is not going out. If you need to understand. So let's say you are my customer. I sold you a t-shirt. I sold you a product. You are supposed to pay me for that, but you did not pay me. That doesn't mean it is my cash outflow. It means that my cash inflow did not happen. That is why it is a reduction in the cash. So Lekha, incorrect. The answer is it will be have a negative impact because it is reducing my cash inflow. Clear, Buchibili? Perfect. Awesome. So you need to understand it this way, guys. My net profit is an accrual number. It reflects the profitability based on the sales and the costing that I incur, not on the cash movement. So if there is any portion of the revenue that I did not receive, so my net profit will be showing a higher number versus my bank balance. And I need to reduce the profit for that period to reflect the cash. That makes sense? So always remember this table, guys. Just remember one cell, others are mirror images. If an asset increases, it has a negative impact. If you are buying a machinery, that means you are utilizing cash, again a negative impact. If your AR is increasing, that means you are not receiving money, that again means a negative impact. If your asset decreases, that is a positive impact. You sold a machinery, you collected AR, positive. If your liability increases, that is a positive. That means you took a loan, your liability increased, that is a cash inflow. If your accounts payable increase, that means you were supposed to pay them, but you did not. So your cash outflow has reduced. Again, a positive impact on the cash and a negative. Always remember this. If you learn this equation now, guys, you will never go wrong. For asset, always do opening minus closing. For liability or equity, always do closing minus opening. So let's say in 2022 and 23 we have the balances. We have account receivable of 200 and in 23 it becomes 250. This is AR. Inventory similar 150, 130. And then we have a loan which is 300 and it becomes 290. If I do asset, these two are assets. If I do opening minus closing, that means 200 minus 250, that is negative 50. So automatically it is showing a negative impact. If it is a decrease, it should show a positive impact. So positive minus, opening minus closing, 150 minus 30 is positive 20. So if you follow this equation, you will automatically get the right value and the right sign. For liability equity, it is 300 to 290. That means it's a fall. You must have paid off the money. The cash would have gone down. So closing minus opening. 300 is opening, 290 is closing. So it will be 290 minus 300 minus 10. That is consumption of cash. Clear? Always remember this equation and this is the logic. This is the concept. This is the first question. Any doubts? All is clear. Can I have a cheer up? Perfect, 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 perfect. Awesome. Let's go to the next question. I'm not going to tell you the concept until you tell me the answer. Quarter 1, quarter 2, quarter 3, quarter 4. And then full year, full fiscal year. You have the revenue of 100, 200, 300, 400. You have a gross profit of 50, 120, 170, 230. You have a cash balance of 500, 600, 650, 750. You have a loan of 1000, 800, 750, 600. So these are the quarterly values that are given to you. And you have to calculate the full year values. This is quarter one, quarter two, quarter three, quarter four. All 4 quarters make the full year. Tell me what will be the numbers that would come here. This is the question. It is going to be a very common case when you will project the financial statements on a monthly basis or quarterly basis and then combine them or consolidate them into the annual numbers. So this is going to be a very common exercise that you will do in almost every financial month. So what are going to be the values here? Tell me. Okay. Post it as a one message. Revenue this, GP this, cash this, loan this. Post it in a single message.
So what is the third line item? Is it cash or
Cash. Cash.
and the next one is loan?
Sorry if I sometimes sound like a doctor. Okay, Amra has an answer. Ganesh has an answer. Amra and Ganesh have different answers. Ganesh, Amra, can you double check gross profits? They're coming. You're using the same approach, but you're getting different values. We have Sovajit also. Sovajit has a hybrid answer of Amra and
What is the Q3 value for GP? It's 130.
50, 120, 170, 230.
All right, 170. I'm correct.
Okay, you took it as 120.
130, I took that.
Oh, my bad.
570 would be the GP.
Yes. So one thing is for sure, this is 1000 and this is 570. This everyone has the right answer. But people have different answers for cash and loan. The concept here is, guys, this is income statement data and this is balance sheet data. Okay. As a concept, income statement is prepared for a period and balance sheet is prepared as at a date, as on a date, as of a date. Okay. So income statement numbers are representation of a period for a duration and balance sheet is as of a moment. So this 100 number means this is the revenue of quarter one, revenue of quarter two, revenue of quarter three, and revenue of quarter four. So if I have to find the revenue of full year, I need to find the revenue of all the 4 quarters, that during the 4 quarters, what was the revenue, and it has to be the sum. So in income statement, always you do the summation of the individual periods to get to the consolidated number. So for 1000 and 570 is correct. 50 plus 120, 170, 170 plus 100, 270, 270 plus 70, 340, 340 plus 200, 540 plus 30, 570. Okay. But balance sheet is prepared as of a date. So if it is a quarter one balance sheet, that means it is as of, let's assume calendar year 31st March. This is as of 30th June, 30th September, and this is as of 31st December. And the fiscal year balance sheet has to be 31st December. So you will take only these values. So the answer is 750 and 600. Everyone, is it clear? Because you are going to say that Let's say I ask you a question, guys. What was your bank balance as on 30th May? Someone will say I had X dollar, someone will say I have Y INR. If I ask you, okay, for the entire week, what was your bank balance? You will say, hey, what are you asking? Bank balance is as of a date. So even you ask me 1 week, 1 month, 1 year, my life, up till 30th May, my answer is not going to change. But if I ask you how much did you earn in that particular month, in that particular quarter, you will have different answers. So those are flow items. And this is a static item. This is as of a date. So balance sheet, you take the same period. For income statement, you sum them up. That makes sense to everyone? Now we know income statement, we know balance sheet. But what about the cash flow statement? So a cash flow statement would be like this. You will have CFO, you will have CFI, you will have CFF, then you will have net cash, then you will have opening cash balance, then you will have closing cash balance. Let's say it is these numbers. Populate these values here. What will be the values in the last column? Tell me. For a cash flow statement, you have the quarterly numbers. Tell me what will be the annual numbers.
What is the Q4 values of opening balance and closing balance?
Okay, I'll tell you everything. 100, 100, 100, 200, 200, 200, 333, 400, 400, 400. Then the total becomes 3, total becomes 6, 9, and 1200. This is 1000, total becomes 1300. It goes here. 13 plus 6, 19, 19 plus 9, 28, 2800 plus 1200, 4000. Lavina says 500. You're talking about which value, Lavina? What is 500? Which cell? So let's name it. It is A, it is B, it is C, it is D, it is E, it is F. CFO. So you are saying 500 for CFO? No, no way it is right answer, Lavina. It's an incorrect answer. How did you get to that 500? Lavina, tell me your approach. Muchubali, you want to say something?
No, sir.
Okay. What is the answer for A, B, and C? Let's have them first. Okay. Sudarshan says 1000 each. Amra says 1000 each. Okay. Buchubali, where is net income? There is no net income. There is CFO, CFI, CFF, net cash, then opening cash, closing cash. Okay. So this is going to be 1000. 1000, 1000. The cash that you are going to generate is a period thing. So if I generated 100 in quarter one, 100, 200 in quarter two, together I will generate summation of that. Then I'll sum these up, I'll get 3000. Okay. Now, our opening cash is 1000, not 300. Now, tell me one thing, this quarter one, it is from 1st Jan to 31st March, 1st April to 30th June, 1st July to 30th September, and 1st October to 31st December. So this will be 1st Jan to 31st December. So I have these. Now, the opening balance of a period is going to be the 1st Jan value, which is going to be this. So I'll take the opening balance 1000. I will sum them up, I get 4000. The closing value of this and this is same and it is matching. That means my calculation is correct. So this is how we do it. So for CFO, CFI, CFF, I take the summation. Opening cash balance, I will source it from the first period and I will get the closing, which should match with the last period. So Darshan, 40,000, it's 4,000. Be vigilant while typing. Don't make quick money. Zero is very powerful. Okay, that's it. Any questions, guys? Yeah, obviously it's a typo. It's fine. Okay, Lavina, perfect. Any question, guys? Can I have a final cheer up? A question or a thumbs up in the chat box? Show some energy. Awesome, awesome. Thank you. Thank you so much. Read this page, and that's it for today. In the next session, we'll talk about other things related to assumptions, summary tabs, and everything. And then we will talk about how to project the financial statement. What are the revenue drivers? What are the cost drivers? What are the balance sheet? How to make the cash flow statement. Then we will talk about what are the tips and tricks. What are the hacks? How to make your financial model more efficient? How to do it faster? What are the right ways? What are the right things to do in a financial model? What is the bad thing not to do? All of this. Read this and tell me if you have a question.
So, sir, I have a doubt.
Yes.
Sir, while preparing cash flow statements, if we follow direct method, do we have to provide a reconciliation, to the net income? Like,
Okay, I'll tell you. So, as per the reporting standards, you are free to use any. But if you do it through direct method, you have to give in your notes to accounts the indirect reconciliation. So the companies have to do it twice. So the companies prefer doing it in direct method only. 99%, or I should say more than that, companies follow indirect method only. But if it is a 13-week cash flow model that we will talk about, in that model, we have to do it on the direct method because it is a dedicated model of the cash flow.
yeah, got it, sir. Thank you.
Okay. So there are certain, I would say, myths about financial modeling. It is done on annual basis. No, it is done on monthly basis also. It is done on weekly basis also, quarterly also. It is done by using all the three financial statements. No, it can be done only with the income statement. It can be done only with the cash flow statement also. It is done only for valuation. No, it can be done for different reasons. It could be return analysis. It could be only to see what is going to be the profitability. So you will solve or you will counter all of these myths and perceptions. Okay, cool then. Have a great Saturday. See you in the next session, guys. And thanks for being the lovely people. Thank you. Bye bye.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you.